following is a presentation of TFNN. It is now time for the Diagnostic Trading Hour with your host, Darrell Martin. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Darrell Martin.
Diagnostic Trading Hour. I'm your host, Darrell Martin, and just getting back from the New York City Trading Expo. I know Tom went out there and got to speak as well as speaking out for Direxion out there. But just checking out a few of the different things that are going on, and let's look at where the market's standing at right now. We got the S&P. It is currently down just a few points on the day. Russell's down 4.5. We got the Nasdaq down 12, and the Dow down 28. Copper is pretty flat on the day. Gold is down almost 0.5%, down 5 points right now. We got silver down about 0.25% on the day. We got natural gas is just insane. So not, like I said, every time I see it, I'm like, well, I'm not surprised, but I still am always surprised just because the moves on it are so big. The percentages are so large. Whenever the thing moves, I mean, it moves massive. And it does it a lot. It's not, just an irregular, like, oh, wow, look at that. Natural gas moved. So, I mean, it just takes off. And let me pull this up. I'll show you. Just the massive gap that happened right here. We can make it fit in the window. There we go. And get rid of active trader and our time and sells there. And yeah, so you can see there's this massive open gap and flies up. And so a lot of that movement obviously didn't all happen, just intra-bar right there. There was a gap. And, always make sure when you're looking at it to really make sure you're seeing gaps. You also want to go in, so we'll do that. We'll check out, go to the style here if you're using Thinkorswim. And we're going to make sure on futures we say, hey, show us the extended session. And even highlight it so you can sort of know these are the hours that are not the normal trading hours for that market. Click OK. And then you won't see, the gap being as big as it seems. There still is obviously a pretty nice move. But you can see right there, you actually see most of that movement happened overnight. So the market will report it. When you listen to, a lot of commentators will go, it's up 5%. It's like, it moved 4% like before the market even opened. So, still a massive move regardless. But, it's up 9% on the day right now. Just a massive, massive move there. And huge moves. Let's check out what else we got. We got oil is currently up about 35 cents on the day. We got corn is up a few dollars. We got soybeans down $9 on the day. Euro dollar is down just 10 pips. Aussie dollar down 8. We got the pound dollar is... right now up 38 pips. We got the dollar franc is up 8. Dollar CAD's moving. It's up 115. So it's the big currency mover of the day. Looking on over at US yen, it's down 6. We got Aussie yen down 7. Euro yen down 20. Pound yen is up 42. With euro pound down 21 pips. Even beating out a lot of the other pairs there. So dollar CAD, though, being, like I said, the big FX mover we got on the day. A lot of people just ignore that pair, and it's usually a pretty decently trending, pair out of the group. So it's one of those ones I actually do like trading, but it doesn't usually move that much. But when it does, it also doesn't chop, which is one of the big reasons that I'm often a fan of checking out the dollar CAD. So while we're on that topic, let's hop on over and let's look at the dollar CAD. Let me pull up a smaller chart here. And let's grab dollar CAD. Just looking at my pound yen chart, I mean, that's still just flowing in a nice big uptrend. We're still going for days on the same big uptrend I've been following here. So hopefully that one will continue. All right, so there's our dollar CAD. That ought to be posted over there any second for you. Just waiting on it to appear. And move this one out. And yeah, nice move. So let's see how smooth the trend is. You know, you get these trends in dollar CAD, and like I said, so many people ignore this pair. But I mean, it's just a very. I mean, there's pullbacks like you expect in any market, but they're not just massive. And so you get a little pullback, moves up a little pullback. You know, it's about the biggest pullback you had all day right there, and but it just keeps going. You know, if we pull it up on the 10-minute, you'll see an even smoother chart. And you know, look at that. I mean, that's clean. It's as clean as you get. You know, in trading. And so I get a buy right down here, and still going. Still hasn't hit my stop. He's this little dashed line for my stop, and just trailing it all the way up. I mean, it's the perfect. We're actually at 2-something deviations right now on the day. So it looks like right there we're at we went down 0.7, a little more than 0.7, and up almost 2. So since a little more than 0.7, almost 2, basically we're almost a 3 deviation move from low to high on the day. And that is a like 99.7% of expected move point that we're at on the dollar CAD right now. So not a lot more movement to be expected on it. This is a point where I would, if I didn't have my stop already up here, I would be looking to tighten my stop right away, so we could, put it all together. But looks like we already have it up there. Let's go ahead. Let's check out a couple of the indices, and we'll talk about some of the news as well. Just do a quick S&P review, and then let me pull up the news calendar for the week. And once I get that done, then right over here we got so news calendar. And yeah, so we got the S&P. It made a nice little run up, but it dropped off of that right here, starting to pull back down. Basically a deviation high to low on the day right there, almost down to 0.5, up to 0.5. And so that's something we definitely, you want to be aware of. Even at this point, when it came back down here, you're basically at, again, like I said, a deviation high to low. So on that deviation move, it's not a big surprise that it's going to oscillate back up. So how would I use this? Well, let's say I get a short signal right here. We moved up about 1, we moved down about 1, and see how I use these little ranges. This lets me know my about 1, like I'm pretty much right within that deviation level. That's the highlights you see around my deviations. And so it gets back into that level. I get a sell signal. I'm going to be really cautious. I'm not going to have a stop up here. I'm going to have a stop like right here. So, or I'm just not going to take the trade, or I'm going to make it wait on another breakout or something. But I'm going to be very cautious at a 1 deviation move signal, no matter where it happens. So whether it's 1 deviation up, 1 deviation down, 1 deviation high to low, it doesn't mean if it starts moving that thing won't keep moving. I mean, you can get multiple deviation moves. It's just I'm not surprised about having chop right here on ES. So, because that's where we moved up a deviation, we moved down a deviation, now we're pulling right back up and just basically looking like we're just going to oscillate into the day. Let's see. So, yeah, we'll see if we're able to maybe pull back up here to 18, by 44, 45, and then turn back around and just head back down towards settlement on the end of the day. For news, trading plans, and for news for the week, let's do a little review. Really the only major earnings release that's part of the big, large capitalization value of the 4 major indices, not the 4 major, but the Nasdaq or the Dow, Walmart. So it'll be coming out tomorrow morning at 8:10. So again, that's in the Dow. That wire release time, not the earnings call, but the wire release time is expected right around 8:10 in the morning. So if you are a morning trader or if you're holding positions overnight, you need to be very aware that Walmart will be having its release. And of course, retail sales are very reflected as well in Walmart reports. So therefore, it can have a pretty big, impact on a variety of instruments throughout the market, not just the Dow itself, but definitely can impact the Dow. Okay, so we have that, and then let's see here. The other things we had, let's see, yesterday, we had a UK CPI trade for the pound. So let's go in. Let's look at that pound trade. And let's check it out. Pull up the pound dollar over here. And then let me go in. And it came out at 428 this morning. So now I'm going to zoom right in. Actually, I don't want to zoom in too much yet. Let me back on, back out. I want to grab, there's actually a couple important rules because I talked about these last week. Let's do it one more time. Let's see here. We'll go over. We've got to capture all the time that we're interested in. A little bit more. There we go. Okay. And so now here's what we're looking for. Now I'm going to zoom in. And here's why I'm doing this. This report usually takes a while to move. Okay? And so since it takes a while to move, you often want to be able to get into the trade, early. But let's check out our measurements on the trade, on our high to low and everything else, and did it meet those measurements? And we'll be able to tell you. Okay, so our high to low after the news report, which you can tell obviously happened right here. So right here at 428 when the report came out. The high to the low at 7. See if I'll get it to draw it for me. The high to the low at 7 o'clock. Right there. We got 75 pips. We expected a 70 pip move, high to low. So we did get our expected range on the high to the low move between after the release within the couple hours there. I usually expect that move to be done about 7 or 7:30. I know now this one, fortunately, it actually did do a pretty nice move just right out of the gate. 60 something pips right there, just literally instantly. A lot of times, and I go through and I look at each chart for every news release and see what patterns are consistent. And yeah, there are definitely a few out of the last 12, just looking at the last 12 months, that took off there in the first 15 minutes. But there are about 7 or 8 of them that took a couple hours. So I focus on the 7 a.m. release time. And you can, of course, enter early. My personal, you can enter right, within an hour before. Personally, I've seen that very often, and not always, but very often you'll see it trend. Now, it may trend up, it may trend down, so this can help or hurt. More often I've seen it help than hurt. A lot more often. But a lot of times I'll look to get in, around midnight on this trade. And, if you would have done that, then the trade would have been about a break even for you on the trade. On this round, break even, I'll take break even. If you got in right before, if you executed the 7 o'clock, then you definitely would have got a nice trade. All right, we'll stay right there. We'll be right back after this break.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Victor Jones, or Darrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.
Investors, Taz Market Research delivers to its subscribers expert commentary on the analysis of 15 different markets each day. Get this invaluable and timely information through the daily market research videos Taz Market Research produces each day before 9 a.m. The video analysis will include reports on currencies, interest rates, indices, metals, energies, grains, and more. You'll be able to gauge where high profitability setups are in each of the markets. Receive a free 2-week trial subscription to Taz Market Research videos on the front page of TFNN.com. Darrell takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
All right, folks, welcome on back here to the Diagnostic Trading Hour. And we're just looking at a few different things. And one of those that we're looking at is just the pound dollar news and how far it's moved. We got a nice, like I said, 75 pip move. That was the expectation. And the reason I bring all this up is you can go in, you can put on a trade. Normally, like I said, you could put it on at 330, but if the market moved up and then it continued to move up, we got a big pullback, and so that helped today. Okay, so, but how do I put this? Let's say you log on at 3:30 to play the 4:30 news announcement, and you see the market's already up, like, say, 40 pips. Well, when that happens, you're probably, if the market does do a pullback, it'll work out great, most likely for you. But if it keeps going, you're probably only going to get another 30 or 40. Whereas very often when the market moves like that, then I'll get that bigger move, and I'll miss out on it if I wait, because I only get that 30 or 40. So I like to get in on a lot of these pound trades around midnight. And I look at each one of them individually. I don't treat all the news announcements the same. Every one I look at, on its own merit. And I also bring it up because we have another one coming up Friday. So on Friday, we're going to have the pound retail sales report. And usually a pretty nice move. Set over 70% of the time, we get more than 50 pips. The average move is 70 pips. And also, you can take a look at the, let me see here. The pound yen often has, they sort of compete back and forth. The pound yen and pound dollar will compete back and forth on biggest move on this trade. And so, my suggestion, just in case one of them falls flat, usually they, both move or, both don't. But it's pretty rare that both don't. Okay? Move like the move that we're looking for. And so one of the ways that you can do this trade is, let's say you were going to do 2 contracts or 10 contracts or 100 contracts at a divisible of 2. Do half on pound dollar, half on pound yen. So pound dollar goes 100 pips and pound yen only goes 40 or 50. Or pound yen goes 100 pips and pound dollar only goes 40 or 50. Then, maybe you break even on one or make some on one, but then you also get your 1-to-1 on one. If they both go, you get your 1-to-1 on one. You're not really increasing your risk over, the way you'd be increasing your risk is if you would only do 1 and now you're going to do 2 because you're going to do 1 on each. So it's not really about increasing your risk, it's more about hedging by diversifying your risk into 2 different highly correlated currency pairs that, in this case, like I said, they'll sort of go back and forth on which one makes the biggest move. So that's a couple things that you can look at, and but just be ready for that one. That one's going to come out this Friday at 4:30, and I'm looking to enter, before midnight. I am choosing the 7 a.m. I'm not looking at the 5 or the 6 a.m. expiration. I'm making sure I choose an expiration that happens after the news announcement comes out, and I'm giving it some time. So, whereas some trades, like Aussie retail sells, I expect it to move in 15 minutes because literally 10 out of the last 12 it did. On this one, I expect it to, 8 out of 12, it takes a couple hours. So I want to give it that time to make its move. And that sort of can be I guess you could say it can sort of be the trick in trading the news. And it's not a hard trick. It's just you need the stats to have a proper expectation. You need the good risk reward. How far should I even realistically expect that this thing will move? And how long does that normally take for it to move that far? And then I go, okay, so, and then if I got in earlier or later, does that help or hurt me? And that lets you figure out, because we're not picking direction. We're not trying to figure out whether it's going to go up or down. We don't care, either one. We're just trying to find times that consistently have large moves, up or down, and now just fine-tune, okay, what's the expected movement, so that way I can make sure that my take-profit goal is within that expected movement. And then also look at what is the optimal time of entry and optimal expiration. Because one can make an argument, well, the 7 a.m. is always the best. Well, what if this report, the move always happens in, say, 15 minutes? Not always, but let's say 10 out of 12 times, like the Aussie one happens in the first 15 minutes. And well, if that's the case, then I'm wasting money by buying a later expiration. So I'm costing myself more, which means the market has to move further for me to hit my 1-to-1, and I'm probably not going to get anything for that time because I don't really expect a lot of additional movement after that first 15. So knowing just these little details really does add up to helping you be a lot more successful when doing the news trades. And also helps you break even whenever it doesn't work out, which is very nice. All right, stay there. We'll be right back after this break.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com. Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Darrell Martin coined the phrase diagnostic trading, and we're happy to announce that his Diagnostic Box Spread Analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Darrell Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
All right, folks, going back here to the Diagnostic Trading Hour. And so, like I said, we're just going through the news, and we basically, we only had a couple main news reports that were trade-worthy, okay? So it doesn't mean there aren't other things that are happening that you can't go and look at, but I'm talking about things that statistically move on a consistent enough basis that I'm willing to do a trade on it. And a lot of times there can be a lot of news, but I won't touch it for a news trade. Not because it's not necessarily, because it's good or it's bad or it's whatever, but simply, like tonight we have a lot of news coming out. Let's see here. Let me see what we got that we could look at on this report. Okay, so we're going to have, this morning we had, the unemployment rate, the bank rate vote, the climate account change, and that was an example of how you could have done the news on, that day right there. But you could also go back and you can look at previous days, current days, and go, well, how did that work out if you set it up and you went backwards and you looked at previous news reports? Okay? So if we go over here, this would be, I probably made that a little bit confusing, but my bottom line, what I was trying to say was, there were a lot of news reports out last night, and they did make an expected, a nice expected move, but they're not consistently, They don't usually, it's not even so much an expected move, they don't usually consistently do that. And so, like, if I go over here to the report that I talked to you about before I left for my show for the 18th, okay? And we look at that, and we look at midnight, and we look down to really our low, which we got to pretty much like right at 4:30 there. So we got 75 pips. And remember I said on the show last week, I was like, hey, don't get into this thing early. Don't get this thing like right before the announcement. Wait to get in, or jump in sooner. Jump in before, 12:30 there. And if you would have got in at 3:30, this is what you would have made. Okay? 30 pips. And which would not have been enough to cover your cost. And this is the pattern that I'm often seeing on the main news trades I'm talking about right here, is where I'll actually see the market move often in the direction that the news is going to go, which does add a whole different possibility, okay? If the market's trending down into 3 o'clock, you might want to maybe even look at adding a short on. That's just an idea. But, you'd have to go through and, I'll work on putting more and more trades like that together. But, of course, you have to be up at 3 a.m. The nice thing about this trade is I go on at midnight. I expect that the market is going to move at least 70-something pips by 7 o'clock in the morning. It moves over 70 pips by 7 o'clock in the morning. I put it on. I go to sleep. I set my take profit. I wake up. My take profits hit. It's done. That's what I'm looking to accomplish. So I don't have to trade at night. So I don't have to spend a lot of time. We're talking 5 to 15 minutes at most to set the trade up. And very simple to do. Now, last night, I did not do the trade. We were measuring the stats on that a little bit earlier. And it got a nice move from high to low. We got a 70 pip there, right, or about 60-something pips, 70 pips from the high right before the news, or, news after. But I don't like that one. I don't like the climate count, asset purchase, bank rate, unemployment rate, pound news announcement. It doesn't have a consistent impact. So it may have worked for you, but statistically speaking, it would not have worked for you if you would have done that trade consistently over the last 12 months. Okay? So it did work. Awesome. Kudos. Glad for you. Be careful, because it's not consistent. If we go in and we look at the, let's see, today we had, building permits, PPI. Those are a couple other ones that people can go, oh, I'll trade those. But again, the problem with those is they just don't consistently give enough movement when they come out. And even though they are high impact rated reports, okay, the consistency on the impact is not usually more than maybe 20 or 30 pips. So it's not something I can straddle. It's probably not something I can butterfly, because I need to do it like right around 9 o'clock, maybe 10 o'clock expiration. Now the other trade we have coming up today is we got our FOMC meeting minutes report. Now, this one does not necessarily have all your fun stats, okay? Because it's a minutes report. It's not a numbers report. But this will be basically Bernanke's last statement, and we got Yellen coming in. And so there's going to be a lot of clues going on, what's happening, what's coming up. And so you want to be very, very aware that this report is about to be released on any trade that you're doing. Whenever the Fed minutes does get released on Wednesday, okay? So we got Wednesday, February 19th. That's about to come up. And I'm just trying to see if there's anything in here that I can see that I like on if that gives me comfort on that trade. And I'm really just not. I'm trying to see a consistency on report, but I cannot see a consistency. So give me one more second. I'm going to check. But I do want you to be aware of it. You're like, why is the market not moving? Well, that would be why it's not moving. It's waiting on that information to come out at 2 o'clock. And so that's also why we're in the chop. And remember when I said earlier we were looking at the S&P, I'm like, I'm not surprised it's not going back. This is like starting to put these pieces together of fundamentals, something coming out, technicals, just looking at, basic trends, statistics, not only historical movement, but even intraday deviation levels, okay? Starting to put those pieces together really helps you see the whole picture a whole lot clearer. And going over here, and so, yeah, we're right back. I said we'll probably go right back up to settlement, and we just did. So, and now we're probably just going to oscillate and do a lot of nothing for the next 19 minutes. And then we'll take it from there. So that's but just be aware that report is about to come out, and that can cause some volatility. It's just not a consistent enough volatility producer for you to trade it. Looking at tomorrow, we have a variety of reports coming out. We got core CPI, unemployment claims, both of those coming out, and the U.S. core CPI, from what I've seen, and I'll do a little bit more for you, but on that, but there really is just not a great. I'm looking here. Yeah, there's not a single pair that 60% of the time it breaks 50 pips on average. So even though the high to low range may be high, it doesn't do that on a consistent enough basis. So it's not really a great straddle strangle type news trade. On the Philly Fed, same thing, definitely not. And then, of course, we got crude oil inventories coming up tomorrow. We'll also have some existing home sales, and but even that was not the biggest mover out of the group. Let's see here. Yeah, not a single pair breaks 50 pips 50% of the time. It's more of a butterfly trade than anything. We'll talk about that a little bit more later in the week. Canada core retail sales be another possibility, but not really. Well, EuroCAD, yes. So if you're a EuroCAD trader, and that might be a fun. That could be a fun show. What we'll do is on tomorrow, we'll talk about how to do a synthetic currency straddle on Nadex. And that actually involves doing 4 legs to do one straddle. We're going to do a long EuroCAD and a short EuroCAD, even though they don't have EuroCAD. And we're going to combine the Euro dollar and the dollar CAD and put them together, and we'll look at some of the potential strengths and potential weaknesses of making a synthetic currency pair on the Nadex exchange, and how that might actually pay off and make you even more money than simply doing a regular FX pair. So we'll go into that. That'll be our main topic of our show tomorrow. So make sure you do tune in for that topic. And like I said, we have the Fed funds rate coming out here in a few minutes. I'm trying to see what are a couple possibilities now. Let me go ahead and pull up the scanner. And let's just say you're looking at, the we'll just say the indices right now. And let's go down to see what's available maybe on the S&P. I'm not really a big NASDAQ spread trader, so because I don't like how they tick on Nadex, the leverage is too low. Which is good if you have a small account. You'll make a little, lose a little, but beyond that, not that great. Looking at the risk, we're talking a 3-point up move right there. That's 75 minutes. None of the, and then you got this one. That's 6.5 move to be break even. 2.5 points to be break even. Yeah, that's 2.5 down to be break even. That's a 415. That's a $63 risk. I'm trying to see if there's even a balance trade in here. That's about as close as you're going to get. You're talking about a 5-point range. And this is always interesting too. One of the things I like to look at is I'll look at the in the monies, I'll look at the premium, the out of the monies, I'll look at the risk, and if I combine the two, that's in essence is like an expected range. So because that's basically the price built into the market. We have basically a 5-point expected move on the S&P up or down between now and 3 o'clock. So in the next hour and 15 minutes, the market is building in a 5-point move. Okay? And if I go over here and I can add, I have a indicator I built for expected range, and apply that. Then I need a lot more data. We'll also change this to 60 minutes, and then we're going to go in, and it needs more than 5 days to give you a valid expectation. And then we can see, what is the expected range just of this hour of the day, regardless of the news happening. What is our average expectation? And it looks like we're right around, expected range is 5.4 points. So, which is exactly what, just looking at the Nadex, spreads is what they're saying as well. So, if we go over here, we look at this. The way I'm getting that is I look at the 3 o'clock expiration, 3 o'clock expiration. I look at what's the proximity to the underlying on the in the money, the I right there, the in the money contract is 25. So 2.5 points. And then I'm looking at what's the risk on the out of the money, because I can only count the actual price built in. You can't break, the distance to get in the money on it. So basically it's 26. So 26 to 25, that's 51, which is 51 ticks or 5.1 points, because Nadex ticks in 0.1s on the S&P. So they're expecting a 5.1 move, which means that you would not make any money on this if it just moves up or down 5 points. You would basically, at best, break even on the trade. Okay? If you get what's called fundamental shock, which is what I'm looking for. Okay, that's the whole point of the news trade, is to capitalize on fundamental shock. Fundamental shock is when the move exceeds the expectation. So, when the move is larger than the expectation, that's when a straddle makes money. If the move is the same as an expectation, a straddle will not make money. If it's less than the expectation, a straddle will not make money. You need the move to exceed the expectation. So as you can see, all these little orange bars down below, we're going to show you this. Right down here is by the hour, like how far I expect it to move every hour. The little blue arrow, that's how far it did move. Okay? And so the only time I could have even potentially made money on a straddle is when it exceeded my expected movement. And that's the beauty of a news report, is it can blow out the expectation. Now, they'll usually build in a little extra on a news expectation. But if we go over and let's say we look at the pound, okay, so just to give it a, we've been talking about the pound dollar on news. If we go over and look at the pound, then pulling this up, there we go. That ought to pull it up. There we go. Yes. And then we can see when did it blow out the expectation, right there during that 4:30 hour when news came out. Okay. What about the night that we had our plan? This was a it does and it doesn't one. That was last night. Okay. What about the night before? So we actually pretty much right on with the expectation. But look at what happened. Remember the hour before? Remember sometimes we get that movement earlier than expected. And so, basically every hour leading up to this, we're getting more movement than expected. At 10 o'clock, 11 o'clock, 12 o'clock, 1 o'clock, 2 o'clock, 3 o'clock, right at expectations, 4 a.m., we blow it out. 5 a.m., we're pretty much right on the money. 6 a.m., we blow out the expectation. And so, over and over and over again, whereas this was just like a couple hours, this was like 6 out of the last 7 hours, it blew out the expected move. That's what I'm looking for, that consistency in further than expected movement. That way I can get past the expected movement built into the option, and that's where I get the edge in a news trade. All right, stay there. We'll be right back after this break.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foresight Fund Services, LLC. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
All right, folks, come on back here to the Diagnostic Trading Hour. And we're just wrapping up, seeing what we got for the week going in. Let's check out where the markets are at right now. Again, that news release is about to come out. So do be aware that we could get some volatility here in the next, 5 to 30 minutes. As the minutes are coming out, I'm sure there's going to be all sorts of market movement, and of course a lot of quiet time here for the next just a few minutes while we're waiting on it to come out, and then we got to see everything start to pop around a little bit. Okay, so where are we at on the markets leading up to the announcement? We got the S&P currently down just a point. We're also down a point. We got the Nasdaq is down 6. We got the Dow up a point. So we can't get much more flat than that. We got copper right now is down 0.02. We have gold is down 4. So we got a pretty good variety on a lot of trades that you can do there. Just trying to look and see. Also looking over at the main currencies, we got the euro right now is down 10. The Aussie dollar is flat. Pound dollar is up 28. U.S. franc is up 6. U.S. CAD holding on strong, up 118. U.S. yen is currently down 5, Aussie yen down 2, Euro yen down 16, pound yen giving some of a back, up only 24 now, and Euro pound down 21 on the day. And that pretty much wraps it up across the board. And, check out, see if you want to do any straddles or strangles. Just make sure they're expiring after 2. Do low risk, test everything out. There's a lot of premium built into the market right now. And I'm just looking across, and there's some pretty wide butterflies going for an hour out at the moment. And I'm seeing some of these things that are 30, 40 points wide, 40 ticks wide for 1-to-1 risk reward ratio. So they're expecting some move in the currency play right now. And the way I do that is I simply go in and I look at the diagnostic scanner. Make sure to check it out if you haven't already. Get access to it right there on the homepage of TFNN. And you can hop in, you click on it, pull it right up, and then just choose your market, whichever ones you want to look at. And we can go, risk to reward ratio 1. We could say max risk 100. And I could say, just stuff expiring here in the next, doesn't matter. They're all going to expire in the next couple hours. And then you can also say, both directions. And so you can see, what straddles or strangles might line up that you like the risk-reward ratio on. But they're pretty expensive. They're building in that move right now. And they're good at building in the moves. So they should be. They're using a Black-Scholes model. It's nothing special. There's nothing off or crazy about it. It's just, it's a simple pricing option model. That's how options should be priced. That's the standard in pricing options. And there's a buy and there's a sell right there, EURD for $30. So that's not too bad. You'd be looking for pretty much a 30-pip move from where the euro's at right now just to break even. You'd be looking for 45 above where you bought it to actually be profitable. So, which means you pretty much be looking at, about a 60-pip move in order to make a 1-to-1 risk reward on the trade. So you start looking at things in the right context, the right numbers, you start putting the pieces together, and it all starts becoming more and more clear. But we'll go into the whole how to do a synthetic currency pair straddle tomorrow, and I hope y'all have a great day. Bye.
Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com. Eastern legend tells of a fair maiden who was offered a rare gift by the king of the land, a bag of pearls. The king promised that she could keep the largest, most perfect pearl she could find with these 3 conditions. 1, choose only 1 pearl. 2, remove 1 pearl at a time, accept or reject it. And 3, if rejected, it would be lost forever. She began by looking at the pearls, passing on many special treasures. She delved deeper into the bag, and soon the pearls were replaced with pebbles. Sadly, she went home empty-handed. Folks, replace pearls with time because we cannot go back even 2 seconds. We live in the eternal moment of now. So when now are you going to take advantage of my offer to you, a subscription to my daily investment newsletter service, Mastering Probability, where you can experience the most incredible pearls for trading and investing, the Rhodes Momentum Indicator and Strategy. The offer? It gets better. A 30-day money-back guarantee. Don't go home empty-handed. Mastering Probability. Available on the homepage of TFNN.com.
You're watching Tiger TV.